Welcome to The Queen's Lair, a lifestyle podcast. Get inspired by our latest tips and information about small business, entrepreneurship, natural hair, travel, food, and even relationships. Stay tuned for another great episode. I am your host, Renee Patrice. Welcome back, everyone. Thank you so much for tuning into my podcast once again. I got this question, and I honestly don't think that I have answered this on the podcast. I have kind of gone through the different types of business formations, the business structures, I guess you could say, when I had a lawyer come on and speak. And I would have to go back in all of these episodes to try to extract that one out to see. But this was a really good question because I have definitely dealt with this within my own business. So the first thing I'm going to do is I'm going to briefly go over the different business structures, okay? And this is all coming from the Small Business Administration, okay? So a sole proprietorship, kind of got tongue twisted there. A sole proprietorship is easy to form and gives you complete control of your business. You're automatically considered to be a sole proprietorship if you do business activities but don't register as any other kind of business. So sole proprietorships do not produce a separate business entity. This means that your business assets and liabilities are not separate from your personal assets and liabilities, right? You can be held personally responsible for any debts, any obligations that happen with your business, okay? Sole proprietors still are able to get a trade name, but they can also find it very tough to raise money because you can't sell stock. And banks are hesitant to lend to sole proprietors, okay? But sole proprietors still can be a good choice for low-risk businesses and owners who want to test their business idea before they actually form a formal business, okay? The next one is partnerships. Partnerships are some of the simplest structure for two or more people to own a business together. There are two common kinds of partnerships. You have limited partnerships, known as LPs, and then limited liability partnerships, known as LLPs. The limited partnerships have only one general partner with unlimited liability, and all the other partners have limited liability. The partners with limited liability also tend to have limited control over the company, which is documented in a partnership agreement. Profits are passed through to personal tax returns, and the general partner, the person without limited liability, must also pay self-employment taxes. Okay? The next thing is the limited liability partnerships are similar to limited partnerships, but they give limited liability to every owner. So an LLP protects each partner from debts against the partnership. They won't be responsible for the actions of the other partners. So if one of the partners goes rogue, the other ones are not responsible for it. It only falls on that one person, okay? Partnerships can be a really great choice for businesses with multiple owners, professional groups like attorneys, and groups who want to test their business idea before they form that formal business. Okay, so now this next one is one of the most popular ones for small business. It's what my company is as well. It's a limited liability company, so an LLC. An LLC allows you to take advantage of the benefits of both the corporation and partnership business structures. LLCs protect you from personal liability in most instances, not all. Your personal assets like your vehicle, your house, your savings account, they won't be at risk with an LLC if you happen to face some type of lawsuit or bankruptcy. Okay. Profits and losses can get passed through to your personal income without facing corporate taxes. This is a major plus. Okay. But, however, members of an LLC are considered self-employed and must pay self-employment tax, contributions towards Medicare and Social Security. LLC can have a limited life in many states. When a member joins or leaves an LLC, some states may require the LLC to be dissolved completely and reform with a new membership, unless there's already an agreement in place within the LLC for buying, selling, or the transfer of ownership. Okay, so if you have an LLC that you formed and somebody decides that they want to be out, you can have a written document put together before any of that ever happens and say, okay, I'm going to sell out my piece to you for XYZ dollars. If you already have that in place, you bring that to the forefront and then you don't have to worry about anything. But if you don't have anything like that in place, you're probably going to have to shut down that whole LLC and restart a new one, which could be a pain in the neck. So make sure that you do your research in deep detail before you actually decide what structure you're going to choose. Okay, so LLCs can be a good choice for medium or high risk businesses, owners with a significant personal amount of assets that they want protected, and owners who want to pay a lower tax rate than they would with a corporation. Okay, now probably the most popular one, or one of the most popular, are corporations. Now there are subsets to that as well. So you have a C Corp. A corporation, sometimes called a C Corp, is a legal entity that's separate from its owners. Corporations can make a profit, they can be taxed, and they can be held legally liable. Corporations offer the strongest protection to its owners from personal liability, but the cost to form a corporation is higher than other structures. Corporations also require more extensive record keeping, operational processes, and reporting. Okay? Unlike sole proprietorships, partnerships, and LLCs, corporations pay income tax on their profits. In some cases, corporate profits are taxed twice. All right? This is what I said. Do your homework before you go into all of this. First, when the company makes a profit, and again, when dividends are paid to shareholders on their personal tax returns. Corporations have a completely independent life separate from their shareholders, which is a plus. It is a plus. If a shareholder leaves the company or sells his or her shares, the C Corp can continue doing business pretty much undisturbed, right? Corporations have an advantage when it comes to raising capital because they can raise funds through the sale of stock, which can also benefit in attracting employees. Okay, corporations can be a good choice for medium to higher risk businesses, those that need to raise money, and businesses that plan to quote unquote go public or eventually be sold. Okay. The next type of corporation is an S Corp. An S Corporation, sometimes called an S Corp, is a special type of corporation that is designed to avoid the double taxation drawback of a regular C Corp. S Corps allow profits and some losses to be passed through directly to owners' personal income without ever being subject to corporate taxes. Not all states tax S Corp equally, so you have to, some of these states, they're more recognizable when they, I'm trying to think of what the word they do. The way the federal government does the taxes and shareholders, some states tax S Corps on profits above a specified limit, and some other states don't even recognize S Corp's election at all. All right? They just simply treat them as a C Corp. So pay attention to these things, okay? S Corps can be a good choice for businesses that would otherwise be a C Corp but meet the criteria to file as an S Corp. And you need to read through all those different criteria and see if this is for you. Again, this is all on the SBA website, all right? So then you have B Corp. A benefit corporation, sometimes called a B Corp, is for-profit corporation recognized by a majority of U.S. states. B Corps are different from C Corps in purpose, accountability, and transparency, but are not different on how they are taxed. Okay, there are several third-party B Corp certification services, but none are required for a company to be legally considered a B Corp in a state where the legal status is available. Okay, these are more obscure, right? You have nonprofit corporations and we all know about nonprofits. They're organized to do charity, education, religious, literary, or some sort of scientific work, right? Nonprofits are often called 501c3 corporations. That's a reference to the section of the IRC code, the Internal Revenue Code, that is commonly used to grant tax-exempt status. Okay? So you have to decide what structure you want to deal with. What structure? I will say this, for most small businesses, and you are going to choose the best thing that works for you, but most small businesses, when you're keeping it simple, limited liability company is usually the way to go at the moment, because that usually covers all the bases for the small businesses. A lot of people are going to go LLC, or they're going to do, a C Corp. One of those two. Those are usually the most popular ones. But again, sit down and talk with your accountant. Sit down and talk with your business manager, or do your own research on the SBA.gov website so you can figure out exactly what the deal is. So I'm going to speak to the most popular for the small businesses, which are single member LLCs. Okay, as a single member LLC is a type of business structure that has an alternative to being a sole proprietorship. Okay, if you choose to be a sole proprietorship, you don't have to do anything other than work for yourself. Okay, if you want to have some protection, you might choose to form a single member limited liability corporation, which is an LLC with one owner, right? Where you're 100% of the owner. You get to have LLC in your business name, and as the name states, it protects your personal assets and limits your liability against lawsuits and creditors, right? So if your business falls into a lawsuit, if your business falls into credit disaster or whatever, your personal liability will be spared, okay? But you have to know those benefits can come with a downside to that. LLCs have to pay to be registered with your state. They're also subject to those governing laws, and you may have to pay an annual registration fee. Now, here we get to the question, how do I pay myself from my LLC? As the owner of a single member LLC, you don't get paid a regular salary or wages. So what you're going to do is instead you're going to pay yourself by taking money out of the LLC's profits as needed, right? That is called an owner's draw, right? Owner's draw, DRAW, right? You can simply write yourself a check or transfer the money from your LLC's bank account to your personal account. Simple as that, right? It's the easiest thing to do. Again, check with your accountant to make sure of how you are being taxed, okay? For the most part, the way that you'll be taxed as a single member LLC is the IRS treats single member LLCs as a sole proprietorship by default, which means your LLC will be seen as a disregarded entity. So instead of the LLC paying income tax, its profits and losses are passed on to you. This means that you don't have to file a separate federal tax return for your LLC. All of your money is going to pass through your own personal taxes. Okay? Again, the disclaimer here, talk to your accountant, your lawyer, your trusted, people, or call up the Small Business Administration. They have all kinds of, information on their website. You can also speak to people on the phone, and they can give you exactly how this is going to work for you. But for the most part, as a single member LLC, you literally, if you have an account that, your money is going to, from your business, you just draw from that account. Or sometimes you can even take a check from that account and put it in your own name. So from your business account to your personal account, just like how you would get a check at work. So hopefully this answers the question for the young lady who sent this in, wanting to have like a background on how she's taxed. Again, I can't advise you on how you're being taxed. You have to give all of your information to your accountant, your lawyer, or whoever is going to be doing your paperwork for this sort of stuff, so you know exactly which one of these business structures is going to work for you, and how how the taxes are going to work for you. But for the most part, most small businesses do roll in the single member LLC arena. And as a single member LLC, you do not have to be taxed twice, meaning you are not going to be paying taxes through the LLC and your personal. Everything passes through your personal. Again, disclaimer, please get with your financial experts and make sure exactly where you stand and whatever rules and regulations have to do with your particular state. Okay? So, answer that question. That's usually the common way that people go. But again, when you are forming your business, you may say, you know what, S Corp may work better for me. Or if you're a nonprofit, you're doing something for a charity, then it's going to be different. So make sure you talk to your financial professionals, and they will let you know exactly what's going to work for you. And then also in different states, sometimes, people will form their business in states other than where they live, and just because of tax purposes and all of that. Have these conversations with your financial experts to make sure that you're maximizing everything on the back end for your business. Okay? So hopefully that's helpful to you guys. Again, I know that this is, finances and stuff like that is always a tricky thing when it comes to businesses. And I definitely am going to have more finance conversations on this podcast. But if you go back in the podcast, you will find the episode that talks about, I was talking to a lawyer. It's one of the Elevation Entrepreneur episodes where I'm talking to attorney Arefo. She has such amazing information that kind of goes down this road, and it kind of gives a little bit more insight as well. So definitely find that episode, and I will talk to you guys tomorrow. If you want to email me, feel free, hello@onyxqueenmedia.com. If you would like to follow me on social media, please do. I always love my new followers. Tag me on social media, like, subscribe, and share this podcast with people if you think it'll be helpful to them. And when you tag me on social media to let me know that you're listening, I always repost shout outs in my stories. All right? So I'll talk to you soon, you guys. Bye. Online savings simplified. Don't search for coupon codes ever again. With one click, Honey's smart shopping assistant will automatically apply discounts to your cart in seconds. Save on all your favorite things. Easily pay less for products you're already buying online. It's as easy as 1, 2, 3. Join Honey for free. It takes 2 clicks to add Honey to your Chrome, Safari, Firefox, or Opera browser. Find savings in seconds. While you shop, Honey will find working promo codes across the entire internet, and you save instantly. With 1 click, Honey will apply the best deals to your cart. It's that easy. So what are you waiting for? Get Honey. Download it today. Visit our link, www.tinyurl.com/ONYXHONEY. That's www.tinyurl.com/Onyx Honey. Start saving right now.